Welcome to TradeTheMBI.com. This is John. This report is for the 26th of November, and it was a nice holiday weekend. It's some beautiful selling within our broader sell signal. Currently, we had the 2635 as a, I don't want to call it a support range, but it was just an identifiable algo point from way back earlier. When you're talking about daily, though, they can last for a very long time. And we've kind of pivoted right across it here, and now you can see it pre-market poking up. That's been mostly short-term buyers. But when you're in the holiday light, you get the light traders being able to flip things around. Could end up with a de facto cross just from the falling red and green sort of stabilizing here at that minus 20, which usually start to get a little bit of a bounce back. We didn't dip below the red line either. So it's finding support, as we would say, at this, even with the declining shakeout in that. We would expect that to start lifting up, but again, you don't have a full buy or anything like that because you don't have any real significant plunge in your orange to give you a successful crossover buy. So we're sort of just in that hanging limbo and continuation short with short-term buyers holding things where they're at. NASDAQ's pretty much the same. It's just a little bit weaker in general. And we can see some of the reasons for that. Just take a look at this one right here. Facebook, nearly 50% off of its highs of August. That's a massive meltdown. And still not looking at a buy given that configuration. And you've had the same broad sell-off too. Bitcoin, barely able to hold well. It's just under 4. Significant decline from those, 16 plus thousand days. Euro stabilizing now that the Brit exit is over. The EU has obviously won. Well, of course, you still have the Parliament to approve it, but it's a de facto deal that pretty much Britain gives everything up. So, good deal for EU. Not so much if you're a Brit. And the strange, of course, this is that bet that ongoing pressures on the U.S. economy are going to result in the Fed deciding not to tighten further, and that's bolstering bonds plus defensive play given the weakness that we've experienced, which has just been holiday light. When you have light liquidity and a little bit of selling, it gets exacerbated. Same thing on the buy side too. And oil continuing its plunge. I mean, geez, we have to go way back now in the chart when we had that first breakout move, because we're down here now. So that fills in these last, got one more positive extreme right about there in the 1040 range. So getting back to end of year last year price range, which that suggests that, there's either no economic activity or just the supply increase that the Saudis and everyone did really has had an impact. You're not seeing a deflationary move yet because obviously if that were the case, gold would be plummeting. So it's one of those where supply has sort of overwhelmed things. So we had a fun Friday. So if we take a look at what was going on Friday, we had a very interesting anomaly take place right down here. New lows, no orange on this, what some people would say, hey, that was a buy signal. Well, never really achieved the buy signal, except for the part here where the orange dipped below green, and then, I don't want to adjust that, I just wanted to click on this orange, was above green the whole time. So this is one of those anomalies where this was never a buy. Interestingly enough, you had dipped below the red line, so the expectation was that this low would get retraced 26.26. So this whole pop-up, there wasn't really anything you could do until the very end of it. In which case, then you ended up with a short signal developing, which wasn't much of one, right at the 50% gold. You were still expecting it to move back up, and then it produced a sharp buy, which gave you the 100%, and then the short signals came in, which were very nice short signals. But very interesting to have that anomaly here where Price rises, but no buy signal. So there's just nothing it could do, and you're just like, oh my God, is that it missed it? Well, not per se, because it was still suggesting that we were going to come back to the lows here, and guess what happens? We end up coming back down to the lows. So go figure. That's exactly how that algo worked it out in the short interim. This was just a deviation back to the previous high. How many points did it really climb? So it went from 26, 28, all the way up to 40, so it's about 12 points. So within norms of the potential, when I say norms of the deviation, meaning the kind of upside pressure that can be applied without a retrace to it. And of course, once the sell signals came in, they were pretty clear. You end up with these meeting points, rejections of green to cyan, and then coupling with the orange, all working together at the same time to give you decent runs lower. The first one was just a beautiful DOC spread and gave the retrace. A little bit of a buy pop was expected. You get the warning sign with the steel crossing right there, and then of course the ultimate steel crossing above that orange and above cyan at the same time, and that produced a little bit of pop until you had the meeting point again, orange though above green, and that was all it took before that caved. And then the new buy setup to start the open, and we're in the middle of that right now, just getting overbought. Potentially right here. Let's expand that a little bit. And that's the current pre-market setup right there, the ABM reset, and it's been following it up right now. ABM and then above the 61% and price near the highs. So we've moved out of the pump area here with the cyan below, so it's back to cyan below red, so still within that positive. So this may have a little bit more. It's plus 20 already, but that's just playing within that deviation. I mean, you saw from the daily, it's not even a significant change. I mean, you're still so far below 2684, which is the 23%, so there's really nothing stopping a climb all the way back to it. We're going to have some other resistance areas, well, right about where we're at here, 32, and then you have the previous high from this one at 71, not really as much because it was just like a push up to try and get to the 23%. So all in all, we should expect some more volatility to continue with this. This has been excellent October, November. You can't really object to these swings. It's significant. So as always, though, I will keep putting up relevant charts and that and try and get rid of the frog in my throat. Trade well. We'll talk again later.